Hello everyone. Yesterday, it's not just the stock market was in confused state, even the crude oil market as well. I mean, there are a lot of oil impacting news, but as a overall, it dropped further down. As most of us know, this oil price increase in the recent time is mainly due to conflict premium and on the expectation of Saudi and Russia production cut, which in turn expects to increase the oil demand. So first, in the last pre-market video, we discussed this. During weekend, there was a report released that because of the Middle East conflict, there was no any ship movement disruption in neither Mediterranean Sea nor on the Red Sea. On top of that, this report mentioned even on future they won't expect any disruption. Thus, on Monday night, crude oil erased its conflict premium 4%. In addition to that, yesterday early morning for October month, Chinese manufacturing PMI came as below 50, which indicates that Chinese manufacturing sector again contracted. I mean, only on September month it came as above 50. All other last 5 months from April itself, it keeps on contracted. In case of service sector, it did come as 50.6, meaning service sector is expanding, but it was way less compared to last month and also less than what analysts expected. Just for info, every day the whole world oil consumption is around 100 million barrels per day. In that, approximately 70% oil exporting between the countries, and out of that, 10 million barrels per day is just exporting it to China alone. Basically, every 1 in 7 oil barrels world export is just to China. Now, that country's manufacturing sector contracted in the last 6 months out of 7 months, which was the huge deal, and thus it did affected the oil negatively. That's the first negative impacting event. Second, last night, US Energy Information Administration released the report that in October first week, US oil production hit the all-time high of 13.2 million barrels per day. In comparison, in August, US oil production was just 13.05 million barrels per day, and in July, it was just 12.95 million barrels per day. One side in China expecting the demand to drop, on the other side in US supply is increasing. So this is the second negative. However, on the positive side, World Bank warns that if there is any disruption in oil shipment, that will increase the oil price by over 75%. This statement kind of provided some support. Thus, digesting all the informations, finally oil dropped further 1.25% more. At the time of this video, Brent crude oil was trading at $85.5 per barrel and WTI crude trading at $81.5 per barrel. Thus, because of all this, as a overall, in the last 1 week, oil dropped over 5%. In the last 1 month, oil dropped as much as 11%. Either way, in anyhow, always dropping oil price is good for India. Now coming to US, before the market opening, as per S&P, almost after 6 months of decline or deflation, US housing price index or otherwise housing inflation came as 2.2% increase. This housing price increase is what exactly market don't want. In addition, even the employment cost increased more than expected. So, on the account of this two unexpected macro, US market opened flat and immediately dropped significantly negative. Still, at 10 o'clock, Consumer Board's consumer confidence data for October month came as 102.6 above the expectation of 100. Here, this measures the level of consumer confidence in economic activity, and this good number eases the worry about recession. Thus, as soon as this data released and along with the short covering before the Fed interest rate decision tonight, made the US market positive and closed positive as well. However, there are some stock-specific negative impact. For example, because of earnings, Caterpillar dropped 6%, which is one of the index heavyweight in Dow Jones. Anyway, in the end, Dow Jones increased 0.38%, S&P 500 up by 0.65%, and Nasdaq increased 0.48%. In case of VIX, last Friday it was over 21. On Monday night it was 19.8, and now last night it dropped another 8% and moved near 18. Regarding Indian ADR, as it is, both banks closed more negative than Indian market, which is kind of indicating 0.5% negative trade today. In the IT sector side, both Infosys and Wipro ADR closed in line with the Indian market, indicating flat opening. About GIFT Nifty, despite US market closed positive, early morning it closed at 19,140. At present, the premium is 70 points, so for now indicating a flat opening. So this is what happened in the global market. Now let's look at the India related info. First, yesterday the global momentum was not that bad. Only Chinese market was down because of its bad PMI data. Other than that, Japanese market and European market, all major economics closed positive. But still, our market closed negative, which again shows how strong the 19,200 resistance is. Anyway, again FII net sold for approximately 700 crore rupees and DII net bought for 340 crore rupees. As a overall, in October month alone, FII net sold for 23,000 crore rupees. In September month, the net sold for approximately 15,000 crore rupees. However, for the whole year, after this last 2 months sell-off, still FII net bought for 97,000 crore rupees. So the picture is not that bad. Second, after couple of times reduction as a whole petroleum crude product, last night Indian government increased the windfall tax to 9,800 rupees per ton from earlier 9,050 rupees per ton. Here, as a knee-jerk reaction, Reliance GDR dropped over 2%. But if you see in detail, actually for aviation turbine fuel, government removed the 1 rupee per liter earlier windfall tax. Similarly, for diesel, they reduced it to 2 rupees per liter from earlier 4 rupees per liter. As we know, Reliance's major export is diesel, so I consider this as positive. But what I consider is not important. GDR reacted very negatively. Third, about quarterly results, Tata Consumer Product, Indian Oil, Jindal Steel and mainly L&T all beats the analyst estimation. Here, just be cautious around L&T. I know it beat the analyst estimation. However, year to date, the stock price increased 40%, so it can create the profit booking as well. In case of Airtel, revenue was down compared to last quarter and also down compared to analyst estimation. However, their profit increased over 37% and mainly June quarter their ARPU, average revenue per user, was 200 rupees. That this quarter increased to 203 rupees. This is a huge deal. In comparison, Reliance Jio ARPU was 181.5 rupees only. Again, even for Airtel, a year ago it was 190 rupees only. Overall, results looks okay. Let's see how market reacts to it. Finally, yesterday, Indian government released the 8 core industry growth data. As per the report, overall increased decent 8%. If required, please pause and have a look. Coal, steel output and electricity posted a growth of near or over 10%. So, those sectors clearly positive. As a summary, again for the second consecutive day, US market closed positive, crude oil dropped and global momentum improved. However, that positivity was not transferred to GIFT Nifty as it indicating a flat to negative opening. In addition, for the moment, Banks ADR and Reliance GDR looks negative and also in contrast to yesterday, at present US future market is slightly negative as well. Then about the things to look out. Today, Hero MotoCorp, Tata Steel, Sun Pharma, Britannia, Ambuja Cements, Adani Wilmar, Godrej Consumer Product, Indraprastha Gas, India Cements and JK Tyre are some of the major Indian companies' earnings results are scheduled to release today. Regarding macro, early morning before our market opening, Chinese private manufacturing PMI, yesterday released one was from government measured, today it is private one. Then during our market hours at 10:30 am, India's manufacturing PMI and in the afternoon, UK's manufacturing PMI data is due. Finally, in the night, very important Fed interest rate decision. In addition, US PMI data and jobs opening data is scheduled to release. Coming to technical, Nifty opened a gap up of near 100 points at the crucial resistance 19,233, which acted as a support in the August month low before this rally started in September. But immediately it lost all those gains. However, in the last hour of trade, it managed to get back above the previous day closing, but again it failed to hold as selling pressure increases. Ultimately, in the end, it closed on the negative note with down 61 points. Thus, it formed a bearish belt hold pattern at the pullback levels. I mean, the opening price is the highest point of the day and it declined for most of the time, indicating the possibility of further downside. So, until yesterday's high 19,234 is not taken out, we can expect the Nifty to trade with a negative bias. Even the hourly momentum indicator has triggered a negative crossover from above the equilibrium line, indicating that the pullback has matured now and a new cycle has begun. So technically expecting the fall to intensify once the low of 18,940 is breached on the downside. Overall, the pullback seems to have hit the resistance and now technically the next leg of the fall might started. Then in case of Bank Nifty, on the daily chart, it also formed a long bearish belt hold candlestick pattern as it failed to hold on the 43,000 mark. Thus, again here also the relief rally is likely to be over as the hourly momentum indicator has triggered a negative crossover. I mean, on the upside, the resistance is now at 43,500 and until there is a closing breakthrough beyond that point, the overall trend will be negative. On the downside, the support is at 42,400 and breaching below might intensify the selling pressure, potentially down towards the 41,500 to 41,000 range. Then from options open interest data, on the call side, 19,200 strike got the maximum open interest, followed by 19,500 and 19,300 strike, with high new call option writing at 19,200 strike, then 19,300 and 19,100 strikes. Thus, this options data also suggests that 19,200 to 19,300 will remain as the key resistance area for further upside in Nifty case. On the other side, the maximum put option open interest was at 19,000 strike, followed by 19,100 and 18,900 strike, with the high put option writing is at 19,100 strike and then 18,900 strike, indicating support at 19,000 to 18,900 level. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this as I'm not a SEBI registered advisor. I'm doing this for my and viewers educational purpose only. Thanks for watching.